Have you ever found yourself in the situation where you were about to take a trade, but you were fearful of the outcome of the actual trade? Well, that is exactly what we will be speaking about in this video, and I will give you the perfect solution to avoid this problem in the future. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so there is a situation where you should always be afraid of actually taking a trade, and there is another situation where you should never be afraid of taking a trade. And by situation, I mean the actual journey, the actual step at which you are in your journey of becoming a consistently profitable trader. Because everybody that starts out at the beginning does not have a clear rule-based strategy that has been already tested, okay? And if you are in a situation where you are trading based on the analysis that you make, but without having a clear set of rules that you can print on paper and just read and execute, if you don't have that, then you should always be afraid of taking a trade because you're simply gambling, okay? You don't know if the next 100 trades that you will take will bring you overall a profit or a loss. And at the same time, if you are in a situation where you have a clear rule-based strategy that you can print on paper and just follow, you should never be afraid of taking a trade because you know, no matter what, if you execute the rules correctly in a large amount of trades, let's say 100, you are sure 100% that you will be in an overall profit because the strategy that you are trading has been both back-tested and live tested and proven profitable. Now, why do I say a large amount of trades? Because if you only trade, let's say 10 trades, okay, it can happen, it usually never happens, but it can happen that you actually have a 10 trades losing streak. Now, overall, on a profitable strategy, that usually never happens, okay? 10 trades in a row that you lose on a strategy that has more than 50% win rate is something that happens it's actually easy to calculate it. I will not do it here, but you can calculate the probability of actually having a 10 trades losing streak with a 55%, let's say, win rate strategy. But you can't really be sure over a small amount of trades that your strategy will perform, even if it's a 100% profitable strategy. But over a big amount of trades, let's say 30, 40, 50, I said 100, but just to exaggerate the concept, over 100 trades, you are right for sure, 100% sure that you will be in profit because you have a statistical edge in the market, okay? You are ahead of the market and actually you're ahead of your competitors in the market because you know that you have an edge that you are applying over and over again. Now, obviously, if you are not applying your rules correctly, then that is a completely different concept because you are not applying your statistical edge. But if you have a clear set of rules that you can print on paper as we have, and we are just applying that set of rules, we are applying a statistical edge in the market, and we know for sure that over a large amount of trades we will 100% be in profit. And speaking about that, I want to show you a trade that we closed with students a few days ago because it is very important to understand why this trade actually nobody was afraid of taking the trade, even though the market had broken the structure on the 4-hour time frame to the downside. And the reason for which I'm making this video is because one of my newest students said I was a little bit afraid in taking the trade, and I told them, look, there is absolutely no reason for which you should be afraid of taking the trade, because even if we do lose this trade, okay, because the market has created a so-called double top, which in other words actually was an F formation, it was not really a double top, as I will now show you. But he was a little bit afraid of actually taking the trade because he's new to the strategy. But I told him there is absolutely no reason for which you should be afraid of taking the trade, because even if now this trade actually ends up being a loss, you just applied your strategy, okay? It's just a cost of being in business, because trading is a business and it should be treated as a business. So losses are simply a business expense. But if you keep your revenue higher than your expenses, you will not lose money. Okay, you will always make money. That is why we don't close a trade if we don't have at least a 1 to 3 risk to reward, meaning that we made at least 3 times what we had risked on a trade. And if you're asking yourself, why do you do that? Why do you always make at least the triple? Why do you don't close a trade and you don't really open a trade if you don't have at least a target which is 3 times your actual stop loss? Because let's say you take 10 trades, okay, and you always have a minimum 1 to 3 risk to reward, and you lose 7 of the trades out of 10. So that is a 30% win rate. So you lose 7 trades, that is minus 7R. Let's say that we are risking 1% per trade, so that is minus 7%, okay? And we win only 3 out of the 10 trades, which is a 30% win rate. But that is plus 9%, because every winner is making us 3%, while every loser is making us lose only 1%. So that will be plus 9%, meaning that overall we are still in profit of 2%, even though we lost 7 trades out of the 10 that we have actually taken. Now, let me show you the reasons for which we actually executed our trade on CHF SGD, because it will be a very educational analysis. Now, let's start our breakdown from the monthly time frame. Now, on the monthly, clearly we had a market. Now, first of all, many of you are asking yourself, but this is an exotic pair. Why are you trading exotic pairs? If you have a good broker like the one that I linked in the description, you will not have any problems in trading exotic pairs, because the spreads will be very, very low, like on the crosses, not really like on the majors, but at least like on the crosses. So if you're trading crosses and you're not trading exotics, it's simply because you have a bad broker, because if you had a good one, you would have absolutely no problem in actually trading them. So on the monthly, we have a very nice impulse to the upside, followed by a correction. If we want to measure this correction, what do we have to do? Simply take our Fibonacci from the low to the high of the impulse, and we can see that the market retraced exactly to the 0.382 Fibonacci retracement, and from here the market started a new move to the upside, which is exactly what we expect in a strong trend, to see the market respect the 0.382 Fibonacci retracement. Going down on the weekly time frame, what we can see. Now on the weekly, we can see that the market clearly had created this candle here. Now this is the candle that the next one is supposed to fill in the wick. So we want to see the continuation to the upside after a candle like this. Now why after a candle like this you want to see the continuation? Because this wick here is actually simply a retracement on lower time frames. So after the retracement, you simply want to see the continuation. In fact, as I will now show you on the daily time frame, that a wick is this retracement here. So the wick that we have on the weekly is actually the retracement of this impulse, correction, and impulse pattern to the upside. That is why from here we wanted to see the continuation to the upside for the creation of a higher high. Specifically, if you're also asking yourself why the market made this retracement, because clearly we had this W formation, and after a W formation, in general, you want to see the market make a retracement back to the neckline, aka the previous resistance, now turns support, and then from here you want to see the continuation to the upside for the completion of the impulse, correction, and impulse pattern to the upside. And clearly, that is exactly what the market was doing, going for a retest of the previous resistance, now turns support, and we wanted to see the continuation to the upside. Now, why was my student afraid of taking the trade? He was afraid because he said, the market here already created the impulse, correction, tried to go higher, and then broke everything to the downside. So here we have bearish structure, and we have the market can easily continue to our stop loss. Yes, but for a series of reasons that now I cannot share on the video because that is part of our entry rules, this is anyway one of our entries, okay? For example, one of the reasons, this is just a basic technical analysis concept, we had this information retesting structure, okay? So we definitely can expect a continuation to the upside. And my answer was, even if you are afraid of taking the trade, you have to take it because all our rules are satisfied for this long. So if you are not taking the trade, you are messing with our statistical edge. And if you're messing with our statistical edge, then what will happen is that you will not have the same results that you had when you were backtesting the strategy because you are tweaking the actual statistical edge. And in fact, the trade ended up being a beautiful 1 to 3 risk to reward to the upside, giving us 3 times our risk on the position. So I hope this cleared out the concept of why you shouldn't be afraid of taking the trades if you have a proven strategy, and actually why you should be afraid of taking trades if you do not have a proven rule-based strategy. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. We first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.